Hello there. This is a continuation of our campaign on different stocks in the Australian share market. We've done a recent one on Orica, and the one before that was QBE. This one here is Karoon Gas, a major oil and gas explorer. Recently had a big find in Brazil, and in my opinion, we're coming into a good buy zone. But once again, as I've done in the previous charts, we have to go back a bit in time in history to see if this vibrates. By that I mean if it follows some nice, easy to predict, easy to follow patterns. So we basically start back in the big low after the GFC before we rocketed straight up into 09. So this was basically an inverse relationship to the rest of the markets, where the major markets were heading down into 09. This had a massive bull run from $1.60 down here all the way up to $12.10. Brilliant if you're on that. You might see next to that I've got a little tag saying first range down, price $9.50. That's the actual low, was $9.50. I've found, especially on the short side, look at the first range down, whether it's in price in the range or the actual low point, and that will give you the completion point of the bear range. And this is no exception. If you look at the top at 12.10 all the way down to this low down here, which I believe was $2.60, it is a range of $9.50, which is the same as the price of $9.50 over there. So I love seeing this. I've used this to great benefit in quite a few shares. It doesn't happen all the time, but it happens enough to be very aware of it and to use it if you see it. Having a look down here, we have low to low of 736 trading days. That's just trading days, not calendar days. Trading days low to low, and we went up from that low to a top of 737 over here. So what this is saying is the trading days between the low and the low gave us the top price. Once again, this is something I see a lot in the markets happening. Another smaller thing is obviously we had a difference between the tops was 473 and we had a bull range up of 477. We're looking at that another way. Basically that's saying it's a 50% correction, but I like looking at it basically more in the dollar and cents terms and the time sense than 50% ranges. As I said previously, I think in the All Worlds forecasting sequence I did, if you're waiting for 50% retracement, you'll be waiting for a long time and you'll be going hungry. So same price up, same price top to top down. Another one thing we have over here is a bear range of $9.50, as I mentioned, in 794 days or 783 degrees. The 783 will become apparent in the next short-term trade we've got, the short-term chart, which will follow this one. Also, we have a top of $12.10 back in 09, and I have 1,212 trade days from the top down to the very, very recent low after the big gap up when they had that previously mentioned Brazilian gas find. So for me, I'm looking good here, but going a bit short term because we have to focus into where we're actually going to go long. We look at that low price here of 388. Now remember I mentioned 784 degrees. Well, 784 divided by 2 is 391. The low price is 388. So I'm looking at a bit of balance here. Once again, and I had $3.09 up, and we've taken a bit of time and price off these two tops. We have the first range down from this major top here down into this low was 394 or 389 degrees. So half of the previous range in time, which was 784. So I'm looking at 50% in time. That's when I say this is the 50% I look for. The same degree, the alternate degree, which is going the same way, not a retracement, but going top to bottom. Just like the previous range was top to bottom, but in double the time. So this range here is double this range here in time. That is a true 50% retracement. Also, we have a very good vibration down here. We have the low of $3.88, sorry. We have the low price down here of $2.36, and we did it in 2.36 trade. So the time once again was giving you the price. Just as over here we had 736 trade days, low to low, gave me the top of 737. So once again, fantastic resolution. So getting back to the recent low, we had 317 days into this low, and now I have 318 traders into the low. I had a chart previously made up about a week ago where I was using degrees, and I was looking at this low over here as a potential low, and it went down about another 5 or 6 cents, and it's come out in actual calendar days as opposed to degrees. I'll look at both. So I was following this. I didn't go long because I had no confirmation, so no damage done, and now I've come into the days, because obviously there's more days in a year, 365, than there is degrees of 360. So I've got 317 days into my low, 318 trade into low. I've said it before, you have to be flexible in this. You cannot be too pedantic. You cannot be down to the 1 cent or the 1 day or the 1 degree or the one trader. One has to be a bit flexible. The market has to be flexible. The market moves differently between its resonance one way and its resonance another. So as I said, I was looking at 311 degrees into here, which would be nice with my 309 in price, but it didn't work out. So now I'm looking at 318 trade to match my 317. Now, if you look back at the Orica trade, you'll see it's exactly the same thing. Also, from low over to recent low was 277 trade. This 389 degrees from top to bottom was 274 trade. So 3 traders out. Like I said just previously, I don't get too hung up on 2 or 3 days or 2 or 3 cents. But for me, this is a great pattern. It's gone up, it's come down, it's closed the gap perfectly, which is a bit of classic charting. No time of price here, just classic charting. I am looking to go long just above here. When it breaks above here, I'll be long.